Hey everybody, my name is Brandon from thestockchange.com, and today I want to talk about Palantir stock, ticker symbol PLTR, and how it is down over 50% in the last 6 months. So now let's get started. So here we are in Google, and here's a 6-month view of Palantir's trend charts here, and we can see what a rough 6 months Palantir has had, down over 50% in the last 6 months. And if we look at the 1-month view here, that's not much better, down over 24%, and if we look at the 5-day view here, we can see that we are down over 15%. As always, when you see large downfalls like this, the question is always, why is that? Well, looking at the 5-day view here gives us some hints as to why the stock may be down, and we can see the steep drop here of over 10% on February 17th, where Palantir reported earnings. We'll talk more about the earnings report in the next section of the video, and we'll talk about why this may have caused the stock to fall. However, I do want to continue talking a little bit about the follow-through to the downside that we've been seeing. Since the earnings report was announced, we have dropped an additional 10%, and that is likely due to macroeconomic factors, which is what I want to talk about in this section of the video here. Currently, there are a ton of macroeconomic factors impacting the stock market right now, with the two most important ones in my opinion being the geopolitical conflict that we are seeing over in Eastern Europe, as well as interest rates rising. So let's focus on the geopolitical conflict macroeconomic factor that we are seeing first, because I think that this does have an impact on stocks, but particularly for a stock like Palantir. Firstly, Palantir is a big data analytics company. Their specialty is to gather large amounts of data, process that data, and then use that data to help humans make informed decisions on what to do. This type of business is not only good to help small, medium, and large-sized companies make better informed decisions to grow their business, but this type of business is also crucial to be able to compete on the battlefield of today and the battlefield of the future. How many troops does one country have? Where are these troops stationed? What is the probability of an attack? Out of the tens of hundreds of thousands of locations that we can put our troops in, which exact spot will best position us for a victory with the least amount of losses? If you have the data, and if you know how to process that data you collect, then those are potential questions that one could answer. Palantir, from its contracts with the United States government and the military, as well as its specialty as an analytics company, in my opinion, whether morally right or morally wrong, should benefit from this ever-increasing geopolitical risk because its data solutions has the potential to help, or hurt a lot of people depending on which side of the equation that you're on. So after talking about how Palantir has the potential to benefit from geopolitical conflict, again, for better or for worse, let's move on here to our second macroeconomic reason that is impacting the stock market and Palantir stock in particular, which is rising interest rates. We can see here in this Financial Times article that the Federal Reserve believes that it is best to push interest rates in attempts to throw some cold water on the fire that is inflation. Inflation is a little outside the scope of the stock review here, but let's just say that it continues to threaten the destruction of the lower and middle class. But the part of the news here that I want to focus on is the rising interest rates. As interest rates rise, asset prices fall. This is due to a few factors, one of these reasons being that the cost to borrow money, the interest rates that you borrow money at, is increasing. The higher the rates, the more expensive it is to borrow, which could hinder the growth of some high-growth stocks like Palantir. Palantir, who currently has zero earnings at the moment, will likely face headwinds as the company attempts to grow in this higher inflation rate environment. So after talking about how Palantir may benefit from geopolitical risks and how Palantir may face headwinds from a rising interest rate environment, now let's head on over to Palantir's earnings report so we can talk a little bit about how Palantir is doing as a business and dig into some reasons of why the stock had dropped more than 10% on the day after its release. Here we are on Palantir's most recent earnings report, and here's the fourth quarter year-over-year view with the most recent quarter ending on December 31st, 2021, which is shown in this column here, compared to a year-over-year view of the same quarter of 2020. We also get a comparison of the full year view ending here on December 31st, 2021, compared to the full year of 2020 as well. First things first here, let's take a look at top line revenues, which is this line on the earnings report here. And we can see the top line revenues here are growing pretty nicely year over year for the quarter from 322 million to 432 million this year, which is an increase by about 35% year over year for the quarter. Now we can also see the same good growth rate shown in the full year from 2020 to 2021. We are increasing from about $1.1 billion for the full year in 2020, increasing to about $1.5 billion in the full year 2021. And honestly, that is not too shabby at all. That is roughly a 50% full year over full year growth rate in revenues, and that is very nice. In the next line here, we can see what it is costing Palantir to deliver these products that is bringing in these revenues here from the top line. And we can see that it is ticking up slightly from about 70 million in 2020 to about 87 million in 2021. However, the important thing here for me is not really the actual numbers, it is the profit margins. And we can see here by doing a little bit of math, we can see that profit margins for this quarter, the most recent quarter of 2021, is about 80%. While in the same quarter last year, we can see that the profit margins are about 76%. Because we are seeing an increase of profit margins for the quarter year over year, this is indicating that the business is still able to find efficiencies to deliver more revenues at less cost. And this is definitely a good thing for the company. Nextly here, let's take a look at operating expenses, which is this block on the earnings report here. For the quarter year over year, we actually see a little bit of stabilization in the operating expenses. And if we look at the year over year view, we actually see a decrease in the spend for total operating expenses. That to me is actually a very good thing. To me, this is indicating that Palantir is pumping the brakes on massive spending. And even while we are slowing down the spending here, we just showed that we were still able to grow top line revenues. By being able to grow top line revenues by 30 to 50%, even while we are slowing down the total operating expenses cost, that to me is a very good thing, because the more money that Palantir is able to keep, the more money that Palantir has the potential to return to shareholders in the future. And lastly here, let's take a look at the net loss line, which is this line down here. We can see that quarter over quarter, we actually are ticking up slightly for the quarter year over year view from 148 million for the last quarter of 2020 to the 156 million that we are losing for the last quarter of 2021. However, if you look at the full year view from 2020 to 2021, we can see a massive decrease in the amount of money that the business is losing. From the full year of 2020, where we were losing about $1.1 billion, to the full year of 2021, where we are losing about $520 million, we are cutting the net loss in half, and that is definitely a good thing for investors and for the company itself. However, we are still operating at a net loss, and we are not yet profitable. In our current market environment with rising interest rates, this is definitely not something that the market will look upon favorably. As always, investing in companies operating at a net loss is always more inherently risky. The company could definitely will and wish its way into profitability in the near future. However, investors need to consider the risk that Palantir does not reach profitability. Take Uber as an example. So after talking about Palantir's fundamentals, how it is growing revenues quite nicely year over year while shrinking its operating expenses, and after talking about the risk that it is still operating at a net loss, now let's head on over to Palantir's trading charts, where we can look for a level to buy Palantir if we want to buy Palantir. Before we head on over to the last part of the video here, I just want to say, if you haven't subscribed yet, please subscribe. That really helps the channel out, as well as liking this video. So with that said, let's continue on to the last part of the video. So here we are in Palantir's trading charts, and what a fall we have had since our all-time highs here back in January of 2021. We can see that we broke this key support level of $17 to $18 here, and since we have broken that support level, we have been making a downtrend lower since then, all the way down to the $11 to $12 level where we are at now, which is coincidentally where we broke out from back in November of 2020. So firstly here, I want to recognize that we are in an incredibly tenuous market right now, and an incredibly volatile market. Even though I think that this $11 support level where we are at right now could definitely provide some support for the stock, that does not really matter at the moment. If we look at the momentum here, the momentum of the stock is incredibly strong to the downside. because this downtrend is incredibly strong and we actually just crossed a very bearish technical indicator on the Nasdaq in general, this downtrend could blow by our $11 support level here, even lower, and maybe even reach pre-SPAC announcement prices around the $9 level. I think the $10 level may be a good place to start stepping in or expanding a position to Palantir if I wanted to expand or step into a position in Palantir, but I would need to understand the risks that this stock could go lower. I would have to understand that if geopolitical things hit the fan, or if interest rates continue to rise through the roof in order to tamp down inflation, then we could see this stock plummet even further to the downside. However, I would also have to understand that in my point of view, because of the decent fundamentals that we saw in the second part of the video with the growing revenues and the lowering of operating expenses, and in a few years, I think Palantir may be in a good position for the future, especially because this company is focused on data and data analytics. Again, around $9 or $10 is where I would be stepping in if I wanted to expand a position in Palantir. But after talking about that, let's take a look at the MACD charts here and the RSI charts down here, and we can see that the MACD blue line here, the short-term momentum, is crossing under our long-term momentum orange line here, and that is a bearish sign, which could indicate that there could be more downside to the stock to come. We can also check a look at the RSI charts here, or the relative strength index, and we can see that the RSI is just about touching the oversold territory, which to me is actually a good sign if I wanted to be looking to step into Palantir, because that is indicating that Palantir may be trading at a discount price compared to its recent history. So that was my review on Palantir stock. Let me know what you thought about it in the comment section down below. If you have any questions or if you got any mistakes, also drop me a comment down below. If you like the video, please like the video. If you haven't subscribed yet, please subscribe. And as always, thanks for watching, and I hope you have a great day.